What is going on, guys? Naeem Al-Obeidi here. We're going to be talking about how I'm preparing for this upcoming Bitcoin rebound as we start to see the major equity markets start to stabilize. As you can see with this Bitcoin chart, we've got this major macro ascending triangle forming here. And in the green here, as you can see, I've got the 200-week moving average highlighted here for you guys. So you can see this very significant level that is starting to rise up and is currently right around that 5630 level. And then right now you can see we are testing this major resistance level, which was the previous bottom at the last rally before we went back above 10,000. And if we go into a micro chart, you can see we're currently seeing bearish pressure here and we're below this major level, which is going to potentially indicate that we're going to start to see lower levels, as we've been talking about, potentially towards that 200-week moving average. And I'm going to talk about why I'm not really so impressed by this recent breakout over the weekend, due to the fact that when we look at volume, you can see here, volume is not necessarily starting to look so good in regards of a major breakout with low volume. Now, the good thing is it looks like we still have more buyers than sellers, as we talked about. When we look at this daily chart, when we initially dropped, you can see that huge wick that was created as we broke major logarithmic support levels along with major macro support levels. We saw more buyers buy up this accumulation area, which shows us strength in this zone. And so the reason I want to point that out is because following this area and this wick, what ended up happening is we saw major accumulation occur between that $4,000 and $5,000 level, which was below the 200-week moving average at the time. And then we saw price action finally go above, and now we're starting to see a consolidation in this area where we've got this major support level, which is right around that $6,400 area. So I'm going to talk about the bullish and bearish case with you guys. We're going to be looking at total hash rate, as you can see, starting to see some lows, the confirmed transactions per day maintaining these lows, the crypto and fear index still at extreme fear. But most importantly, we're going to be looking at the equity markets and looking at the headlines on what's happening right now as we start to see extended lockdowns up until April 30th. Initially, we thought this would last until Easter, but of course, this is going to be extending even further according to Trump. We're going to look at the Chinese manufacturing activity, why this could kind of forecast how our economy may rebound faster than we think, which will also allow Bitcoin to rebound faster than we think. And a big part of that is going to be the whales holding more than 1 billion in stable coins right now on the sidelines, and why that could be a huge determining factor of liquidity flowing back into Bitcoin and skyrocketing prices before the halving, as it comes in less than 50 days. Don't make fun of me for saying the halving, Ron. I know you guys love saying that. I see we have Sean Davis, Peter, and Nicholas on the live stream. And then also you can see here, crypto whales moving 50,000 Bitcoin worth as XRP exits. You know, really the point here is we're seeing a liquidity crisis. And what that means is most investors are coming out of equity markets. They're coming out of commodities and bonds and traditional assets, even precious metals and Bitcoin, of course, and they're starting to hold cash. And we can see that with the record numbers of USDT, which is the tethered US dollar currency, the digital currency on exchanges, showing that the majority of people are tethering to the US dollar right now. And what's important to realize is people do this at a time of fear and a time of crisis, as we can see with the crypto fear and greed index showing extreme fear. But eventually that money's going to have to flow back into different markets and different assets and equities. And understand the way the feds are responding to this economic downfall is by printing money and artificially injecting into the economy, therefore causing hyperinflation over the long term for the US dollar. I know some people are saying, oh, well, other countries are going to be printing more money, and so it's going to balance everything out. That doesn't matter. The point is, at the end of the day, if you looked at our video on Friday, we talked about the central banks and their assets, and how we went from 4 trillion to over 5 trillion in less than a week, and that is set to continue higher. And of course, once they get congressional approval to start buying up stocks, we're going to start to see more liquidity flow into the stocks, and the feds might end up owning companies in the S&P 500, these Fortune 500 companies, and that's just pumping artificial liquidity into these markets and creating artificial value, and investors are going to be looking for a deflationary asset. And so the fundamentals for Bitcoin are here, and we can see that with this volume showing. As Bitcoin sold off, we didn't see this with any other market, in my opinion. You look at US oil seeing new lows, new historic lows. If we look at US oil here, new historic lows. There's no other asset acting like Bitcoin right now during this time of crisis, in my opinion. You can see US oil seeing these new historic lows. I mean, we're talking worse than 2008 already, and we're down to levels that we were at in 2001. And so that's happening with Saudi Arabia and Russia going through their oil crisis. But the point is here, Bitcoin is not acting like any other asset, and the fact that we're seeing a huge potential for Bitcoin to rebound here very soon. And so I'm going to talk about the bullish and bearish case. This is very important, and we'll take some questions from our live audience. Sean says it won't last. Yeah, I know. Isn't that insane? Oil seeing those lows. Now, we're going to go ahead and zoom into this chart because I don't expect us to head towards this region anytime soon. And the reason being is we're in a liquidity crisis. At the end of the day, you can see we've got so much tether on the sidelines right now, so much US dollars, so much investors in hedging in the US dollar, and of course they have yet to deploy their liquidity into markets, and so I don't think they'll just randomly deploy them at these levels. Investors are smart. Smart money typically comes in when prices are low, and so I am going to be expecting lower price levels here, but realize that we do have a bearish and bullish case that will potentially happen here for Bitcoin. Now, of course, if we ever have the chance to go above 6,400 and see a close above 6,400 with some volume, then I'd be very bullish for Bitcoin to start going up and testing these other resistance levels around 7,300, and then of course around the $8,000 area, and of course 9,000 to finally break out of here. Because once we break out of here, I'm expecting what we eventually recently saw with gold as we broke out of its triangle. And that would be for price action to finally get outside of this triangle. And this is going to be over the long term, the bullish case scenario, and then find some support along that resistance before finally starting to trend back up and see potential new highs, post halving. And I don't expect prices to see that sort of high until after the halving, and maybe a few months after the supply is cut in half. And so don't make fun of me for saying that word wrong, but realize that the fundamentals will take time to catch up with the technicals and the actual price action. So I want to go into the macro here, talk about this bullish and bearish case. Right now you can see I've got these two dotted lines here drawn out for you guys. This one here on the top, this gray line representing that major support level that we saw act as the previous bottom before we saw that $10,000 level with the recent bear run, and then back over 10,000. And so that's going to be a very significant level, because understand, people that accumulated at that $6,400 area in December of 2019 got great solid positions. If you got a position right down at this low, you were able to ride that up to 10,500. If you have yet to sell, understand, even right now, you're not even in a profit. And so realize, if we look at what's happening in the micro right now, at least over the short term, you can see we're still below this. And that's why on Friday I said we were short-term bearish and mid-term neutral and long-term bullish. But right now I'm going to say that we're short-term neutral, short-term, being the fact of thinking the next few days, the next week, and in the medium term, the next month, I think we're still neutral. And what I mean by that is we may see consolidation, and in the long term, I still believe we're bullish. And the reason I say that is we're not necessarily seeing the bears fight so much with the bulls right now. We're seeing a consistent accumulation at each and every one of these levels, and I talked about that on our video from last Monday, and that was the fact that anywhere in this zone, in my opinion, long-term is a good accumulation area for Bitcoin. But understand, for those of you that want best possible positions, what I'm expecting is we've got this parallel channel forming here right now. And of course, you can see today we found that resistance right along that same area where we found resistance at 6,800, and then eventually previously we saw that double top form. So we initially saw that double top form at 7,000, and then we retested that. We formed this descending resistance level. We started our way back down. Of course, we saw equity markets see strength over the weekend into Monday, causing Bitcoin to see a breakout to the upside. But here's the thing, it was all with low volume. And so with low volume, you never want to take that into high consideration, being the fact that it's not so intentional. And so realize that I'm expecting us to fall from here, and you can see we're starting to fall from here. And the reason being is we saw low volume, we did see a breakout. And when we look at equity markets right now, if we were to pull up the equity market futures for tomorrow, you can see we're seeing moderate growth, nothing crazy here. The Dow up 10 points, not even over 0.2%, any of the markets, the major indices here. And therefore, when we typically see this, it really can go either way at market open. And so realize that right now I am expecting this to potentially start to head back down. If we retest this support that we've already tested once, twice, 3 times, I expect the 4th time to break. I don't expect that to last too long. And I think maybe this week we're going to be able to get that 5,600, that potential $5,700 entry. And it's not necessarily a price level to me at this point. It's more so where the 200-week moving average is. And so what I'll pull up for you right now is another interesting chart. And this is all of the macro support and resistance levels from the weekly chart dating back to the 2017 rally. And the ones being significant are the ones that are more highlighted, the ones that are a clear white here. You can see the $6,400 level being clear white here. That green was the previous 200-week moving average. We can see that's actually moved up since we drew this chart. So I'm going to go ahead and move that up for you guys so you can see that's slowly going to creep up. And in my opinion, that is where we want to position ourselves for a great long position, because in the past, when you look at that 200-week moving average, that was the perfect bottom from the 2017 bull run from 20,000. You can see we bottomed out at that 200-week moving average. So I am not afraid to enter long positions with significant capital at that 200-week moving average. Of course, we did wick below that with this recent economic downturn, but a big reason for that was because of the derivative exchanges and the liquidations that we saw that were out of this world, historic amounts of liquidation. And that's always been an issue with the crypto market, seeing more derivative volume than spot volume. And so we've talked about that in the past. And so realize my expectations right now, we're still neutral. Things could really go either way within this market structure, but for the most part, I'm waiting for that 200-week moving average for a solid long-term entry position, as we know that in the past was a great area and acted as a bottom from that 2017 rally. And when we look at this macro structure, it looks as if anywhere in this lower region of this triangle is a good area to accumulate Bitcoin. As you can see here with this chart, this area right here, anywhere below this apex, towards this apex, which another interesting aspect is right now that 200-week moving average is at the apex being the end of this triangle formation. So anything in this area, in my opinion, is a good accumulation zone. Anything in the middle would be more neutral, and anything at the top would possibly be a range to rebalance a portfolio, sell positions, or even hold positions, depending on if we break out of this triangle, which I expect we will over the long term. I'm very bullish about Bitcoin being the only deflationary asset right now amidst all of this turmoil, and that's going to lead us to our articles that I'm going to talk to you guys about just here in a second, before we look at the fundamentals here, which are extremely important, and then we'll take some questions from our audience here. Adel says, Naeem, it's moving exactly like the S&P 500. Why? Don't worry about the S&P 500 too much. It will eventually decouple. I think it's really watching to see whether or not the S&P 500 will see further lows, which is highly possible, but realize at the end of the day, even if that occurs, like gold saw in 2008, we talked about this 3 weeks ago in our video on Monday. We talked about how gold in 2008, if you guys remember, was initially going down and then eventually started to go up as the S&P 500 continued to crash. And so I don't believe Bitcoin will see further breaks below this level based upon the amount of volume that we saw come in as we saw these lower levels below 5,000. So I think investors really like getting positions into Bitcoin at this level, and I'm not against that. At the end of the day, let's say Bitcoin was at 20,000 at one point. Supply is about to get cut in half in less than 50 days. Realize a $5,000 Bitcoin, that's 1/4 of what the value was in 2018. And so realize that that's a great deal. You're getting a 75% off Bitcoin. And so I don't think that's a bad area. I think that's why we saw more buy volume than sell volume come in. So Alex says, right on, Naeem, great input. Thank you guys. If you do appreciate this input, make sure to like the video. That shows me your guys' appreciation for this content. Total hash rate here, you can see starting to drop. We're seeing major mining facilities. I saw some headlines. They're starting to close down. What does that mean? Over the long run, it doesn't really matter. I don't care about the, I mean, yes, we need miners. We need it's part of, continuing the network. It's part of securing the network, of course. But at the end of the day, realize that we're going to have miners over the long term. And I expect that to just pressure Bitcoin's price to even go higher. So anything in charts right now, they're hard to really take into big consideration just because of the fact that these charts are all going to be down based on what's happening with the economy. These mining farms that aren't profitable right now are having to shut down, but there are going to be some that will survive. What I do like is if we did have an ability to draw a chart here, you can see it's almost like we're maintaining some support levels here with this initial drop, but I'm not expecting this to see too much further downside as we approach the halving coming up in less than 50 days. But realize what's interesting here is confirmed transactions per day still trending at these lower levels. Nothing surprising to me right now, but I will show you some charts that do actually surprise me, and I think they'll surprise you as well. Fear and greed index at 12. That's typically when you want to start buying into Bitcoin. I think Bloomberg recently changed their signal from neutral to buy for Bitcoin. The last time they did that was in December. And so December is actually a great time. That was when we bottomed out at 6,000, then went to 10,500 eventually at the start of the year. So realize that things are looking good for Bitcoin right now under that $6,000 level. In my opinion, that 200-week moving average being that prime area to purchase. And if I were you, just set your buy limits at that level right now. Go on Gemini, go on Coinbase, whatever exchange you use, set your buy limits and get your long-term positions there and just hold, of course. But look at these major indices. You can see not much action coming into tomorrow, so we'll see how that ends up. I'm expecting this to just kind of be fairly uncertain for now, but realize there is some positive here, and I'm going to talk about that, and it's going to have to do with China's manufacturing bounce that recently was shown on charts. Nobody was expecting this with China, but they're actually doing way better than they were doing before the huge crisis in Wuhan. And so I'm going to talk about that in just a second, but I want you to realize that things are probably going to be locked down here until April 30th nationwide here in the US. Trump has extended this until April 30th. Is that a bad thing? No. At the end of the day, we have to prioritize the health and well-being of the American people, and so that's totally fine, but at least we have a deadline, and that's huge, and that's important to know because realize the S&P 500, these major indices are pricing this stuff in already, and so it's not a big deal for us to start actually getting these numbers. And of course, this is going to be very interesting for you to see. China says manufacturing activity expanded in March, defying expectations of a contraction, and you can see here with this chart, I actually have a more detailed live chart here. You can see we actually dropped down even further than we dropped in 2008 during the recession, but look how fast we bounced back immediately. We didn't see any lag here. We went straight down and straight back up. And what's very interesting, in 2008, that did not happen. It went 1, 2, 3, 4, 5, 6, 7, 8. Look how much weeks it took for us to start to recover. And in China, in 1 week, huge levels to the upside. Daniel just subscribed to the YouTube channel. Thank you so much. Appreciate that. I know we're catching back up with all of these phase 2 crypto YouTubers. We were the original ones, but Nicholas Merton and I and a few others that were part of the scene back in the early days. There's 2 phases really with all the crypto influencers, which is interesting. I actually am going to be speaking at a virtual conference here coming up soon. I'll give you guys some details of that in our Discord. But anyways, very interesting. And this confirms my hypothesis that we're most likely going to see a fast bounce at the end of the day when things start to recover in the US. Our economy was fundamentally sound prior to this whole economic downturn and global pandemic. And so I believe as things start to get better, as we start to get deadlines, as we start to get numbers, things are going to look better. We're looking at what's happening nationwide. We're seeing lower death counts than we thought, which is very positive. But we're also seeing some negative things. If you look at Rhode Island, the governor of Rhode Island is going crazy right now with, New Yorkers. They're literally checking anybody that has New York license plates. They're doing some things, in my opinion, they're unconstitutional. And so, desperate times calls for desperate measures, but don't break the Constitution, because you see that happen time and time again. And so, there are some things that are worrisome right now. There also are things that look positive. We're in a very uncertain time still. If you look at S&P 500 for the first time ever, the volatility surpassed Bitcoin for the first time ever. Seeing things like that, it's all uncertain for everything but one thing, in my opinion, that's Bitcoin, and the fact that it's a deflationary asset and it has one role, and that's for a global recession to have something to maintain the wealth and value of your capital. And that is why it was created in 2008, for a time just like this. I'd love to hear you guys' thoughts here in the comments. Josh says, what does the US chart look like now? Which US chart? Peter says, China recovered quickly because the government fudged the numbers and they're all wearing masks. Yeah, absolutely. You look at Singapore, you look at China, you look at these Asian countries that are used to wearing masks due to the pollution in their air. Those are the ones seeing flattening curves more than anyone. And so I think it's important, Trump actually just recently announced that it might not be a surprise that he mandates every American needs to wear masks coming out of their homes. I think that might actually happen here before this lockdown is over. So thanks for mentioning that, Peter. And that's the truth at the end of the day, and so, I think we'll adapt, like Charles Darwin said, it's not those the ones who succeed are the ones who adapt the fastest, right? It pretty much is what he said. So interestingly enough, more than $1 billion in stablecoins balance waiting on exchanges. Very positive for the possible huge rebound for Bitcoin. It says most stablecoins have been increasing drastically in terms of market capitalization. This came during some of the worst trading days for the cryptocurrency market when most digital assets plunged more than 50%. It's that liquidity crisis that we recently talked about. And as we continue in this article, it says over $1 billion could trigger rapid price movement with Bitcoin and the altcoins. And it's really good that we're seeing that. And not only are we seeing a lot just being in Tether and sitting on these exchanges, we're seeing whales starting to move huge amounts of Bitcoin, $320 million here in Bitcoin, and realize all of that, in my opinion, is important to see right now, because most of these whales are not in Bitcoin or in a crypto right now. They're in cash. And so the cash can only go one area, in one place, and that's in a crypto asset, especially if it's on the exchange, or obviously other assets like equities and commodities and precious metals. But for the most part, if they're moving it in Bitcoin, I think they'll probably end up putting it back into Bitcoin. And so one thing I want you guys to realize here before we'll take some questions from our live audience, make sure to like this video if you enjoyed that information. But if you do own a small business here and you've been hit hard by the pandemic, this is a limited amount of time. This will probably run out in the next 3 to 5 days, but you can apply for a free $10,000 grant. The link is in the description below. It's an Sba Loan Relief. It's a forgiven loan. It's a grant that does not have to be paid back. Matter of fact, they give you the $10,000 wired straight into your account after 3 days of applying. I'm sure there's other terms and stuff, and this is applying to anybody that's ever 1099 somebody. So if I were you, go and apply if you think you might. If you have tenants, there's also a requirement in there. It says even if you don't have a business, but you have tenants and you're considered an independent contractor, you can apply for this $10,000 grant. I mean, they're printing money. You might as well try to grab some of that money if you can. And if you don't qualify for this, there's a lot of other things that you might qualify for. I would definitely look into that right now. With unemployment benefits, I know if you've driven for Lyft or Uber, if you've done any of these gig economy jobs over the last few months, you can apply for additional unemployment up to $24,000, I think, over the next 12 months can be given to you pretty much for free, just for applying for unemployment within your state. And so a lot of things happening. This is the form for the disaster loan. And so for those of you that want to go to that link in the description, very simple and quick form to apply. But I wanted to mention that to help some of you guys that are going through any sort of liquidity crisis or have, rental properties like Sean Yevon says, and so, this could help, Sean. So, I believe you do qualify, being the fact that you have tenants. And so let's see here. The Brown Bear says, do you not think it will pop down to the 4,000 mark before the halving? I think max downside at this point is going to be within this triangle. If we go below that 200-week moving average, that's the most bearish I can see things going. And so I'd say around that 4,600 right now is that max bottom area right now. So if you really want, I would set buys up all throughout that zone. For me, I'm not going to get greedy. I really would love a position at that 200-week moving average, and I'd be fine with that. At the end of the day, Bitcoin has to prove itself this year. With the economic crisis, we're seeing real estate prices plummet right now. As Sean just said, worried about possible tenants with his rental properties. If you're over leveraged, that could be an issue right now. And so there's a lot of things that are uncertain. And so realize this is when Bitcoin is supposed to come and do what it's meant to do. And so I think that's extremely important. And Crypto Spark says, meet Kevin on YouTube, is reading the bill and has videos about it. As he comes across information, I suggest his channel. Funny enough, that's where I got my information as well. So great YouTuber right there. Thank you for mentioning that. And the Crypto Brand says, Bear is being delisted from Binance. I still want to short BTC and not take a loss on this. I don't think it'll dump to 6K before 3 to 5 a.m. when they delist it. Yeah, sometimes when they're doing stuff like that, Crypto Brand, I like to sometimes just stay on the side. Especially when exchanges are doing maintenance, I like to stay on the side. Stay on the side is always a conservative strategy, and it works well because you just never know what's going to happen. At the end of the day, there's a lot of manipulation in this market, so you want to be careful for things like that, of course. But I'm sure you are. You seem a little bit more experienced and veteran here. So Josh says, you had the China recovery chart on the screen. Curious if there was a U.S. one as well. U.S. has not recovered from anything thus far, Josh. Just realize that in Wuhan, they're restarting things right now. Flights are coming back in and stuff. So in the U.S., things are just starting to get worse, in my opinion. And so the U.S. is going through what China went through about a month ago. But the reason I showed you that chart is to realize that China bounced back fairly fast here. It didn't bounce back that fast in 2008, and it kind of approved the hypothesis that I mentioned in our last video about us bouncing back from this huge crisis fairly quick once things get confident again. It's because our economy was sound before this all happened. Now realize there are some some things here that could occur where we see further lows, but for the most part, I'm hoping we found the bottom for the market. A lot of people are saying we haven't. We are 30+% down. Realize at the end of the day, we don't want to see things get worse. You can see we're above this support level now, which I think is one positive here, but there are a ton of support levels here that we can sit here and draw out that we're going to have to eventually retest. You can see we've got a level right here that we have yet to come and retest, and so we may potentially see a rejection here, so we don't know what's going to happen, but hopefully we go up, and that's really what we want to see here with the stock market. But who knows whether that's artificial or legitimate. The point is, I believe that investors are realizing, well, if the Feds are just going to print money, buy bonds, and buy these commodities, then where's the real value if it's artificial? And of course, they're all going to be looking for a deflationary hedge for their assets to maintain their wealth. And, traditionally they look at gold, but now they might look at Bitcoin. I had one conspiracy theorist friend tell me, he's like, they don't actually want gold, they really want silver. And so he's like, the elite actually really want silver. And so that might be a food for thought there. Sayad said, what buy limit should I set tonight? I'd say 200-week moving average is a no-brainer. We bottomed out in the past, that 200-week moving average. You can see also here with the S&P 500 index right here, we're actually finding some potential resistance here at that 200-week moving average. So it's going to be interesting to see what happens there. We'll definitely be watching that, of course, as that matures and progresses. You can even see with Bitcoin, I think we just went back above this support level. And so you see how we're really just flirting this level. But my issue here is, as much as we see the price action, we don't see volume. And that's my biggest issue. So I don't take this price action too much seriousness, to be honest with you, just because we don't see the volume. I want to see some consistent volume with the price action. Now, I will give it to Bitcoin. We're seeing more buyers, in my opinion, than sellers here. But we're seeing a lot of these big sell pushes down, So you can see here, I want to see a volume that matches this when it comes to buyers. We haven't seen that yet to this whole push up. And so, if we saw volume bar this big pushing us back up, then I may have said that may have been the bottom there, but no, I think we're sitting on low volume here. Could possibly be just us coming in and filling the CME gap that was created here recently, which it looked like that's what Bitcoin was doing. You can see we actually did. We went ahead and filled that CME gap. And so it looks like that's really all that this whole push was about, to fill that CME gap. And now we go back down. And so it's interesting to watch this right now and, just be careful. Abe Evans says, what's your opinion on options? Just be careful with options. So, CryptoStars, it didn't matter before it crashed, won't matter when it goes back up by manipulation. Sean says, great advice. I bought my bag of BTC last year in the 3K range and holding it for the long term. Good stuff. Alex says, physical bullion has really sold out lately with the drop in spot prices. Yeah, we're seeing a big, crisis there. So I appreciate you guys tuning in. It is 2:38 a.m. here. If you guys appreciate this live stream, like the video. Thank you guys for tuning in. I'm going to head out. I'll see you guys on Wednesday, and I'll check you guys, I'll check out all these markets again, and we'll go through it. And so, yeah, thank you guys for tuning in once again. I really enjoyed this live stream. I'll see some of you guys on our Discord. For those of you not in our Discord, join our Discord, and I will talk to you guys soon. See you on Wednesday. Peace out, guys. Thank you for tuning in live today. Have a good night. Take care, Mr. Janat. Snipers out. I love it. Sean says, get some rest. Thank you, guys. Kitten Toots, thank you. Pasha, thank you. Take care, guys. Mitesh says, thanks.